Are you a passive investor? Have you maybe invested in syndications as an LP? Or you maybe a real estate investor and you're kind of not sure what to do right now because you're not wondering whether this is the right time to get into investing because the market seems to be so crazy right now. The problem is that in times like that, now is the time to invest, right? That's the time we want to invest, but we're afraid. And so how do you overcome this fear? And the answer is an investing skill that no one ever shared with me, but when I discovered it, it allowed me to move forward. And that's key. It allowed me to actually make better investment decisions. If you want to know what that skill is, stay tuned. I'm going to share it with you next. Hey, my name is Michael Blanc, and now people become financially free with real estate. The problem is, of course, when everyone's in a mood to buy, right? It's tough, right? It's competitive. Things go higher and everyone wants to get into something. And then the opportunities come up when, of course, there's fear in the market, when there's blood in the streets. We saw that in 2008, right? Oh my gosh, you probably know people who personally lost houses in foreclosure and it was a mess, right? And of course, that's exact time when we needed to get in the market. And it's a little bit something like right now, there's a lot of interest rate hikes, of course, that happened 11 in a row, and it really kind of lowered multifamily prices, for example, in that time. And so there's a lot of headlines. And you're like, man, me as a passive investor, I was like, well, should I invest in these deals? And maybe you invest in one of those and it didn't go quite as well. And so as a result of this fear, which is an emotion, you don't make good investment decisions. And so let me share with you kind of what the solution is to that. And when I tell you these things, hopefully that'll help you make better investment decisions. First thing is you got to stay calm. You got to stay calm. You can't make good choices when you're agitated, right? When you're stressed about something. You got to stay calm and put this in perspective. You got to go to your happy place, your calm place, whatever that is. For me, it could be walking, taking a walk, right? Or working out in the gym or praying, right? I get a lot of strength from my faith as well, but you got to stay calm, right? Because maybe you made some investments that are not going so well. You just got to stay calm and have that perspective that you're investing in a long term, right? You don't want a quick money. You want build wealth and cash flow in the long term. Number two is you got to resist the herd mentality. So you got to know that when others are selling, right, that's when you want to buy. And you want to sell when others are buying, right? So right now, that's what Warren Buffett does. He buys high quality assets that are temporarily undervalued. And in the multifamily space, that's exactly what we're in right now. We have fundamentals that are extremely strong. Rents are strong, demand is strong. You can't build any more affordable housing. It's like a fixed housing stock. The only thing you can build is Class A luxury. You can't build affordable housing anymore. And there's more and more people coming to this country. They're moving south, whatever. So there's a shortage. And as a result, rents have been going up over the last 2, 3, well, actually been going for 10 years. And so the fundamentals are strong. But what's happening is because of the rate cut, the rate increases, the prices have gone down because the lending has been disrupted in a meaningful way. So prices have come down, sometimes as much as 30, 40% in some areas in certain situations. And there's some distress happening now in the multifamily space. And gosh, wouldn't it be nice if we can take advantage of that, right? But only if we stay calm and we realize that when there's blood in the streets, somehow there's opportunity. But how do we get ourselves to that point? That leaves me to point number 3. You got to educate yourself. You got to understand value. You have to understand risk. And you would put them together, you have what's called a risk-adjusted return. Because not all return is equal. I can give you a deal with a 15% IRR, and you're like, this is great. Or you can say, that's awful. I got another one with 20% return, right? Okay, but what's the underlying risk? And when I say educate yourself, it doesn't mean that you have to be an expert in multifamily syndications. You're a passive investor because you don't have to do all the work, right? But number one, you got to educate yourself. And one of the ways to do that is by asking questions. It baffles me sometimes that there's some investors who just wire money in and never ask questions. Now, we tend to fight that because we are in the education business, so we actually want to educate our investors. We're convinced an educated investor is a better investor. What if 4 videos could give you everything you need to build $10,000 a month in passive income in as little as 180 days? I've proven it many times over, and so have hundreds of other people just like you. And one of the best ways we discovered to reach financial freedom is by investing in apartments. Now, I know that sounds like super advanced, but the truth is you can get started today. You don't need years of investing experience. You don't have to have millions of dollars in the bank. So register for the free Masterclass Apartments 101 today and take that first step to really discover how you can build true wealth for yourself and your family. Let's do this. But there's some of our peers we've had conversations with where investors lost money, let's say, but they never asked the questions. Well, what questions did you ask? Oh, I don't know. It said 15% return. You got to ask the question. And the answers are common sense answers. So just does the operator actually provide you with answers that make any sense? Number one. But number two, on the education side, is really understand that multifamily deals are completely different right now from multifamily deals 2 years ago, let's say. Okay, 2 years ago, March of 2022 was the height of the market. And it was frothy. Cap rates are the lowest, valuations were the highest, loan proceeds were the highest. You can get 80% buying and also for the construction as well. Interest rates were historical lows. Those things are completely different right now. Where I have a deal under contract, for example, right now, and that deal is completely different from deals that we did 2 years ago, right? The price is 40% lower. That same property was worth 40%, is now 40% lower than it was even 2 years ago. And so the price is much lower. Interest rates are much higher, right? So back where 2 years ago, where everybody agreed that we're at a historic low, well, zero is pretty historic, and they're only going to go up. We just didn't know how much and how fast. But interest rates were super low, okay? Prices were super high. And a driving factor was the lending. The lending has all but frozen right now, right? The loan proceeds are much lower. You're not getting funding for the construction anymore. You oftentimes have to layer what's called preferred equity on top of the loan to actually get to the point where you can buy anything anymore. But as a result of all of that, the prices have come down. Now, so when you look at how these deals are underwritten, they're vastly different. If you look at the risk spectrum, you could argue that 2 years ago was towards the higher end of the risk spectrum for multifamily. If you look at how deals are underwritten now, you could argue that they're actually on the lower end of the risk spectrum for multifamily, because the interest rates are high and the consensus is that they will either be stable or slightly go down. No one's predicting another 11 rate hikes, okay? So in the spectrum of interest rates, it's actually much lower than it was 2 years ago. Prices are lower, right? Loan proceeds, loan to value are much lower as well, which always inherently is less risky. So if you look at the risk of the two time frames, 2 years, you could argue that it was relatively risky in the multifamily space, which as a whole is less risky. But in the spectrum of multifamily, it was on the higher end of the risk spectrum. And if you're looking at the same multifamily asset now, it's now towards the lower end of the risk spectrum. So even if returns were only a 12% IRR, okay, which they should, the lower the risk, the lower the return should be. You may want that, or you always have in your portfolio, you're always looking for a balance of things that with high return, high risk, and low return, lower risk. You're getting 5% in a money market right now, right? That's low return, well, relatively low return and low risk. Well, actually, no risk at all, except for maybe it going down if interest rates go down, right? You were looking at your portfolio, and you're constantly figuring out what are my risk profiles, right? And how are they correlated? If something goes up, this may go down and vice versa. So you always have to understand the risk-adjusted return of any kind of investment that you make. So really kind of pay attention to it. Understand that what we went through in the last 18 months was unprecedented. Like it has no bearing on the fundamentals of the asset class, which is multifamily. That's very strong. It's just the interest rates really changed the game significantly. We have to understand that the pendulum swung from one side and to another. The trick now is to recognize opportunity when you see it. That's why we have to stay calm. And then the other one, you got to be courageous. I mean, I think that this time the next 2 years are going to create more millionaires and more wealth than we've seen since 2008. The people that took action after 2008, man, I mean, holy smokes, amazing. Now, all of this is obviously easier said than done. Education helps. Surround yourself with other sophisticated investor helps. Going to conferences helps, right? You're always around other investors. If you want to be, or you are a sophisticated investor, you want to get to that point where you can look at opportunity. You can recognize when the risk and you can see the opportunity, and you can recognize that sometimes investments don't go the way they plan. So pay attention to those things. And now is the time to invest, right? But to make a good investment decision, you got to stay calm, educate yourself, ask questions, understand what's going on right now. And then you got to develop the courage to go against the masses like Warren Buffett does. Now, I'd love to hear from you, because I'd love to hear from you in the comments. What's holding you back from investing in your first, or maybe your next real estate investment, your syndication or anything like that? What's holding you back? Why are you unsure about that? And then maybe a related question, what are you investing right now? Like and maybe it's money market. You're like, maybe I'm just going to sit in cash, but really analyze yourself from what would it take for you to take advantage of opportunities that we're about to see in different asset classes. Love to hear from you. Thanks so much. Catch you next time.